a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about biotech ETFs. And we know that stocks have rebounded this month after a brutal first half because some investors believe that the sell-off was overdone. It could be reaching a bottom. And second quarter earnings so far were better than feared, but this is the most important week for earnings, and this could actually provide a direction to the market. Now, biotech stocks were beaten down a lot in the past few months, and these stocks were earlier big beneficiaries of the pandemic because many of these companies were developing new treatments and vaccines for COVID-19, and that demand for their treatments and vaccines also led to a historic boom in IPOs and M&A activity in this space. Now, this over the past year, this M&A activity had almost dried up. But now some investors, particularly hedge funds, believe that these ultra cheap valuations could revive the M&A activity in this space. And talking about the ultra cheap valuations, some of these stocks, publicly traded stocks, had fallen so much that they were trading below their market capitalizations were below the amount of cash that they were holding, the cash on their balance sheet, that is according to the Wall Street Journal. And according to the Financial Times, hedge funds now look at, some of the hedge funds are looking at biotech stocks that could be the beneficiaries of revival in the mergers and acquisition activities because big pharma companies are looking to boost their drug pipelines, and they may buy these ultra cheap small biotech companies. But investors should remember that biotech is a high growth, high risk area. So if you should look at it only if you have a high risk tolerance. And if you have a high risk tolerance, this space has a lot of growth potential too. Now let's look at 4 ETFs in this space. The first one that I'm highlighting is the most popular biotech ETF. It is by iShares. The ticker symbol is IBB. This is market cap weighted. Has about 8 billion in AUM and it charges 45 basis points expense ratio. Let's go to the quote page on Zacks.com. To learn more about this ETF, you can read our research report articles using the link. You can go to the iShares webpage for this ETF. And as I mentioned, this is market cap weighted. So the top holdings, you will see Amgen, Gilead, Vertex, Regeneron, Moderna. These top 5 themselves account for almost 35% of the portfolio. So you will get a very top heavy exposure in this ETF. Now, last year, Invesco launched a cheaper version of tracks an index which is very similar to IBB's index. So you will get a very similar exposure. This is, which I mentioned, is very cheap, 19 basis points expense ratio now. But it is small, it's 23 million in assets. So if you want to do a short-term trade, then IBB is more so suitable for you because of the liquidity. The trading costs would be lower, but if you want to invest for slightly longer term, then IBBQ is worth a look. Again, to learn more, you can go to the quote page on Zacks.com. Using the link, you can go to the Invesco webpage for this ETF, and let's take a look. You will get an exposure which is holdings which would be pretty similar to IBBs. So there's that is something which investors should remember. Now, the third one which I'm highlighting is by State Street, Spider, S&P Biotech ETF, ticker symbol is XBI. Now this is quite different from the other two because this follows an equal weighting scheme, and because of the equal weighting it tilts away from the larger giants in the space, the pharma giants in space, towards smaller companies. So more risk, more growth potential, cheaper compared to IBB with 35 basis points expense ratio, but very popular with investors, 7.6 billion in assets. Again, to learn more, you can go to the quote page on Zacks.com and you can go to the external homepage. So you will see a very different kind of exposure. Twist Biosciences, Fate Therapeutics, Intelia, Global Blood, Editas, etc. are the top holdings in this ETF. The last one I'm highlighting is by ARK, Cathy Wood's ARK Genomics ETF, ARKG. This was one of the biggest beneficiaries of the pandemic. That this was the best performing ETF in 2020, and that is why a lot of investors put a lot of money in this ETF, 2.9 billion in assets now, and because this is actively managed, this is expensive, 75 basis points in expense ratio. Again, to learn more, you can go to the quote page and the external homepage, ARK web page for this ETF. So this holds CRISPR, targeted therapeutics, bioinformatics, molecular diagnostics, stem cell and agriculture biology companies. Remember, these are very risky companies. Some of them will do very well, some of them may fail. So this ETF is suitable only for very high risk tolerance investors. Exact Sciences, Teladoc, CRISPR Therapeutics, Fate Therapeutics, Signify Health are among the top holdings in this ETF. On the next slide, I have the comparative performance over the past year versus the S&P 500 index, and all of them were beaten down a lot. So after the recent rebound, the S&P 500 index is down about 10% over the past year. The two market cap weighted ETF, which I mentioned, will give you a very similar exposure. They are down about 25%. The equal weighted XBI is down about 35%, and the ARK ETF is down more than 65% over the past year. On this slide, I have the comparative performance over the past month. So the S&P 500 is up about 1%. The two market cap weighted ETFs have also rebounded about 1 to 2%. The equal weighted ETF is up about 5%, and ARKG is up about 6% over the past month. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, and I'll see you next week.